Today on the Blockchain Report, Bitcoin's holding strong at 119K. Meanwhile, Trump's inspecting the Fed's $2.5 billion facelift because bullying Jerome Powell in person just hits a little bit different. Jack Dorsey just made it possible to pay for tacos with Bitcoin. No QR code yoga required. And 11 different AI models ran simulations of the future, and most crowned Bitcoin the last currency standing. All this and more on today's show. Let's go! Good morning, my apostles of the algorithmic apocalypse. I'm Hank Hudson, coming to you live from San Francisco, where the Wi-Fi is fast, the coffee is overpriced, and the guy who installed your fiber yesterday is now pitching you a tokenized llama farm on base. It's Thursday, the weekday equivalent of a dead battery, technically still functioning, but asking to be replaced. Markets are jittery, sentiment is a little confused, and somewhere in DC, a senator just asked if Bitcoin can be paused for maintenance. But before we autopsy the fever dream that is digital finance, do your part, smash that like button like it just leaked your seed phrase, and follow RoxomTV and me at Hank at RoxomTV, because scrolling without sarcasm is basically volunteering to be scammed, so just do the right thing. Now, whether you're tuning in from a Miami penthouse paid with borrowed stable coins, a WeWork in Lisbon, or a hydro-cooled shed in upstate New York mining Satoshis, refill that stale mug of caffeine, mute your fake Zoom call, and let's unpack why Thursday continues to be the most delusional day in crypto, the one where everyone still thinks the bull market might start tomorrow. But first, let's take a peek at how the numbers are moving in this morning's Market Rundown. Let's go. All right, it is Thursday and the markets are being nice to us today. Love to see it. Great way to start the morning. Right now, Bitcoin just had a recent surge, literally within the last 10 minutes. We're back up over 119K, currently sitting at 119.4. Things are looking good. Hopefully some new all-time highs on the horizon very soon here. Ethereum continuing to surge, currently at 3,740. They've had a nice 3% uptick here in the last 24 hours. XRP doing its thing as well. They're sitting at 325, a bit of a scale back. They were sitting around 350 yesterday. We've seen a little bit of a pullback. People are still waiting for XRP to be the monetary revolution Brad Garlinghouse has promised us for so long. But I think it's been Bitcoin the whole time. But it's fun to talk about. Next up, we got Cardano. They're up 2.25 today, and Dogecoin up 1.5%. In TradFi, things are looking, the Dow Jones is down 110. The Nasdaq is up 60. The S&P 5 is up about 19 points this morning. And not a lot going on in TradFi today except Tesla getting bludgeoned with a 9% down. We're taking a break. When we're back, we got Joe Eppel from Xapo Bank joining us in the show. Stay tuned. We'll be back with more.
Security matters. Xapo Bank, the only way to bank your Bitcoin. Apply now at xapobank.com.
All right, welcome back. It's time for this morning's Bull Run, where we go over the top stories of the day. Let's get into it. First up, Donald Trump is going on a field trip, and it's not to a rally, a golf course, or a courtroom. It's to the Federal Reserve's $2.5 billion renovation project. That's right. The former president is touring the Mariner S. Eccles building this week, and the timing is anything but subtle. The Fed's marbled headquarters is currently being gutted and rebuilt. The original budget, $1.9 billion. The new total, $2.5 billion and climbing. Apparently, the only thing inflating faster than the money supply in the Fed's is the Fed's construction bill. Trump's joining the tour alongside Office of Management and Budget Director Ross Vaught, Federal Housing Finance boss Bill Pulte, and his Deputy Chief of Staff, because nothing screams economic oversight quite like a group of guys in suits critiquing asbestos removal. The White House says the project may have violated planning requirements, and Trump has made it clear that if he can't fire Jerome Powell, he'll settle for making his life very, very uncomfortable. So now, instead of screaming for rate cuts on Truth Social, Trump is physically walking through the Fed building with a magnifying glass and a grudge. He's already floated the idea that the ballooning renovation costs could be a fireable offense. Although in typical Trump fashion, he later said he had no plans to actually fire Powell. Why? Because his advisors reminded him that nuking the Fed chair mid-cycle could spark a global economic meltdown. Still, Trump has been relentless. He calls Powell too late and blames him for the economy underperforming and wants rates slashed by 3 full percentage points, which in Fed speak is basically a chainsaw to a balloon animal. Powell, for his part, says the renovation is necessary. The buildings are nearly 100 years old. They're full of lead, asbestos, and HVAC systems that predate color television. He says there's no VIP dining room, no new marble, no secret Fed elevators made of gold. But Republicans have already nicknamed it the Palace of Versailles, because in Washington, optics matter more than ventilation. Powell also said the building changes were scaled back to cut costs, not that it helped at all. Trump and Vaught claim Powell made design changes without proper oversight. Powell replied that the Fed's independent, not bound by those rules, and that the changes weren't substantial. Still, Powell ordered the Inspector General to do a second review because when the former president / current president is circling your job and your drywall, it's probably best to cover your bases. So what does any of this have to do with Bitcoin, you ask? Well, the answer is everything. This whole saga, political pressure, runaway government spending, debt-financed vanity projects, and zero accountability is the exact kind of fiat circus Bitcoin was built to escape. When the guy who once ran the country and now currently runs it is now physically inspecting drywall to bully the guy who prints the money, you don't need technical analysis to understand why a decentralized, apolitical, hard-cap currency starts to look really appealing. Especially when the Fed chair is spending $2.5 billion to fix the walls, but still hasn't fixed the dollar. All right, joining us this morning, one of my favorite people, we got Joe Epple from Xapo Bank. Joe, welcome back to the show. How are you on this fine Thursday morning?
Hank, great to be back on the show. Thank you so much for having me once again. And I am doing fantastically. Thank you so much for asking. How are you?
Oh, I'm doing great. I don't have any renovations going on at my home that are being overseen by the former current president. So I think I'm doing okay. Can't be said for some other people. I know, it's the worst. He's just so critical of everything. He says everything I do is the worst. But what are you going to do? All right, Joe, we got a couple stories to go over with you this morning, my man. You cool standing pat? We'll bring you back in just a sec.
Absolutely.
Rock and roll. We'll be back with you in just a minute. But first, you know the macro outlook is bad when even Jim Cramer starts stacking sats. On CNBC, the Mad Money mascot said he's loading up on Bitcoin, and not because of FOMO, but instead because of fear. Specifically, fear of America's $37.8 trillion national debt. Let's take a look at the clip really quick and see what this guy's got to say. He's wild. Bring it up.
I think people want to own some as a hedge against the $37.8 trillion. They want to own a debt. They want to own it for their kids. And you know who else feels that way? Me. I don't want that debt. My kids. I'm worried about my kids. Worried about your kids? 38 trillion.
Yeah, we all do.
Yeah.
We all do.
So
in so many different ways.
Why don't you buy some Bitcoin or buy some ETH?
I think maybe that's the thing to do. How do you buy your Bitcoin, though? Do you buy it through an ETF, or do you want to own it directly somehow?
We're allowed to own that.
But then you got to get it air gapped. You can't allow it because people can, somehow can hack you and steal it.
I like Fidelity as a way, but that doesn't mean there aren't other ways. But I buy it a lot because I'm very worried about the deficit.
And you think that if there were a financial crisis, Bitcoin would hold up?
Yes, I do.
That it is, as Michael Saylor says?
You don't think it's a proxy for risk? For risk?
No, I think it's just a nice hedge for what I'm afraid I mean, I just don't know. Look, I know we can grow our way out of this. My hope is that we do that. But I'm just very worried about my kids. And my kids are like, what are they going to do? They're going to do like a debt refinance? Take down that 11% paper? I mean, what are they going to do? What are they going to do?
What are they going to do? Well, you know, not exactly the cheerleader pitch we're used to, but let's also not forget this is the same Jim Cramer who helped birth the inverse Cramer meme, the guy whose market calls are so consistently off, there's a literal ETF strategy designed to bet against him. Still, it's hard to ignore the symbolism here. When the CNBC poster boy for Wall Street says that Bitcoin is the new inheritance plan, you know the fiat narrative is running on fumes. We're bringing back Joe. Joe, Jim Cramer recently said he's buying Bitcoin to hedge against America's $38 trillion in debt. Do you think comments like this help more traditional investors take Bitcoin seriously?
It's a great question. You know, I think it probably does. We know about the Cramer, the inverse Cramer effect, and I think that's largely a Twitter meme at this point. I think the older generation that's sitting at home and still watching CNBC and taking that as their source of financial truth, maybe seeing it being discussed so openly, talking about, you know, where do you buy it or how do you get it done? You know, I don't think that's a bad thing for Bitcoin. Let's hope the inverse Cramer finally, you know, flippens and we don't end up with a Bitcoin crash in our hands as a result of this clip.
Isn't that the truth? After I saw that clip, my hand has been shaking over the sell button for all my Bitcoin for hours this morning. So I'm really hoping he's not wrong about this one, even though he's seemingly wrong about everything. But every time you see Cramer, he's got something different. He'll probably flip and say Bitcoin is rat poison squared or something next time he's on TV. You know, he's flip-flopping all the time. From your perspective, though, at Zoppo, are you seeing more users come in with this same mindset where they're looking at Bitcoin as long-term protection for their family's financial futures going forward?
I mean, at Zoppo Bank, being able to protect and secure your wealth is our core mission. It's our core goal. And so when people are coming to Zoppo Bank, they're coming there because they want somewhere that they can keep their money safe. And safe means a lot of different things to a lot of different people. I think depending on the context that you're from, safe might not necessarily be your local bank because your local bank is probably keeping your money in a local currency that's devaluing faster than the US dollar. Is at this point. So safe in a traditional financial sense might just be having a USD offshore bank account. What Zoppo has done is we've taken all of the best things that you can do to grow your wealth and keep it safe, and we've built it all into one product that almost anyone anywhere in the world can download, become a member, you know, if you pass all of the checks and so on, and have access to Bitcoin-backed lending, your fantastic metal Zoppo bank card that you can use anywhere in the world to spend that Bitcoin or to spend your US dollars, interest on those US dollars at a very handsome 3.9%, access to the US stock market. And I know I'm speaking to you, Angin, you're sitting in San Francisco, and these things all sound like, you know, I can get that from any of my local banks. But most people elsewhere in the world, these are not things that we have easily available. And so to answer your question, I think all of the customers that we have that are coming to Zoppo Bank are looking for some form of safety, whether that's safety against their own local fiat currency, global macroeconomic headwinds, or just the safest place that they could possibly be storing that Bitcoin that they have and that they are hopefully also worried about their kids, like our friend Cramer, and using some of our features to help ensure that the wealth that they are building will be easily passed on to their kids who they're worried about.
Yeah, absolutely. I mean, Cramer went even as far as calling Bitcoin a hedge against, and I quote, generational ruin. Does that language resonate with the kind of clients you're building products for at Zoppo?
So again, I mean, we are building products for users and members and our customers all over the world to keep their money safe. And as I said again, that means a whole bunch of different things, but certainly Zappo offers that safety net, whereby you can get your money to a jurisdiction that is safe, that is secure, that is trusted. And then if you want to, if to you, safety means keeping that money in Bitcoin, which at Zappo, we strongly believe is not a bad option, then you can do it with us. And not only can you do it with us, but we give that same Bitcoin that you're keeping as safe as possible superpowers. We're enabling you to take out a loan against that Bitcoin without selling it, spend it on the card, as I've already mentioned. So for sure, I think as the markets are moving and as we are developing these products, we're starting to see people coming to us for exactly this purpose. That is our core value proposition in many ways.
Yeah, I love to hear it. Everything you guys are doing at Zappo. That's why you're the best in the business, baby. All right, stay put, Joe, because we're going from one public figure talking about Bitcoin to another public figure who is actually building things for Bitcoin, and I want to chat with you about it in just a second, because Jack Dorsey's crypto dream is taking another step toward your local taco stand. Square, the block-owned payment company, is now onboarding merchants to accept Bitcoin directly at the point of sale. That means no Coinbase plugins, no QR code acrobatics, and no hold on, let me open Strike real quick. Just a swipe or a lightning zap and done. Square's rollout allows businesses to receive Bitcoin or instantly convert it to dollars, all using the same hardware they've been using for years. No new gizmos, no hidden fees, no awkward, we don't take that at the register. I hate that one. This comes after months of testing and development. Now, U.S. retailers using Square's system, we're talking over 4 million of them, have a shot at embracing Bitcoin payments. Now, in terms of volume, Square processes over $200 billion a year. So yeah, this is kind of a big deal. As up until now, Bitcoin payments have been mostly confined to edge case scenarios. We're talking Miami coffee shops, El Salvador pupuserias, and Twitter flex posts from people buying Lambos with Bitcoin at 3% APR. But this move actually brings Bitcoin closer to what it was supposed to be, a peer-to-peer digital cash system, not just a savings account with memes. Now, Square's integration uses the Lightning Network, which means faster transactions, lower fees, and far better UX than the old wait 10 minutes and hope the block confirms approach. It also mitigates volatility, giving merchants a choice between holding BTC or converting it instantly. And yes, this is all happening during a monster bull run. Bitcoin is currently trading above 119K, with new highs hit earlier in the past couple of weeks thanks to ETF mania and corporate accumulation. So Square's timing, nothing short of impeccable. Dorsey has long preached Bitcoin as the currency of the internet, and this is his way of backing it up with a literal register. For now, this rollout is limited, but it will expand in 2026. Until then, Bitcoin has officially made its way to Main Street. Next stop, your local farmer's market. All right, we're bringing Joe back. Joe, Square now allows merchants to accept Bitcoin directly using the same hardware that they already have. How big of a moment is this for real Bitcoin adoption going forward?
I think it's a fantastic moment, because as much as I see Bitcoin as an incredible hedge and an incredible way to protect yourself against the risks we see globally and locally, and depending on where you live. Bitcoin was made to be used as a payment system. And I think as long as the utility of Bitcoin isn't expanded and isn't made the kind of thing that anybody can easily go and, buy a coffee without sweating too much about, exactly as you said, that 10-minute confirmation fee. Who's got 10 minutes of small talk in them with the coffee shop, with the barista, Very few of us. And as a result, I think these are the kinds of exact little changes that we need to start seeing that mean that everyday usage and expectations of Bitcoin just being a normal part of your day-to-day are actually possible. Another thing I'll add to that, though, is, this is an incredible moment for retailers and businesses to be able to accept that Bitcoin. With Zappo Bank, you've been able to spend the Bitcoin that you have in your wallet, in your Zappo account, using our card without any worries whatsoever. You can take your Zappo Bank card, spend $10 worth of Bitcoin to buy that coffee if it's in San Francisco, and be on your way. So big moment, and I really hope we see more of this kind of wide-scale payment acceptance coming soon.
Yeah, absolutely. I mean, it kind of reminds me of the credit card adoption cycle, which I think took about 15 or 20 years in and of itself. You know, people were a little wary of swiping plastic and not using checks were the big thing, and of course cash was around. But this is really solving what seems to be a really big pain point in the crypto, specifically Bitcoin, ecosystem right now. Is it's just not easy, generally speaking, on large scale to buy things peer-to-peer, and an easier user interface that's already built into an app that people are already using at scale. Like you said, it's a big deal. Because while this is kind of simple, built-in Bitcoin payment options could totally finally get people to use Bitcoin for spending and not just saving going forward. Do you think this is kind of beginning to fulfill that promise that, like, Jack Dorsey has always kind of said, like, Bitcoin needs to be something we're actually using day to day. It can't just be a store of value. Do you feel like this is getting us a step in that direction?
Completely. I think if we look at the network effect of an organization as big as Block, and they're enabling payments to be accepted, that's going to mean that Bitcoin is usable in its original intended form as a peer-to-peer digital currency that you can use to do whatever that you need to do. And if that's sending a couple $1 billion around the world for a fraction, for a couple of bucks, or if it's literally spending $1 at a time, that's a really big deal, and that's really important. Anecdotally, so there's a company where I live, which has enabled a similar concept with our local payment providers. And initially, a lot of people were very skeptical, but they now do millions of our local currency and transactional volume every month, which shows that not only is it something that I think fulfills the promise, but it's also fulfilling an actual real user need and want, which is, I have my Bitcoin and I want to be able to spend it as much as I want to be able to store it and use it to build my future generational wealth. So big deal, and I think exciting things to come as a result of it.
Yeah, and from like a product standpoint, what do you think it would take for Bitcoin payments to feel as seamless and trusted as credit cards are for us today? Is that just like a better user interface, or what do you think that next step is so that we can see more broader adoption for Bitcoin as a use of payment?
That's a great question. So, I mean, I think to begin with, as I said previously, with Xapo Bank, you can already spend your Bitcoin like it's a credit card because it's linked to your debit card if you want it to be. And you can simply, cool, I got to pay $100, use my Xapo card. If I had $100 worth of Bitcoin in my account and no US dollars, we'll instantly spend that Bitcoin on your behalf and enable you to take away your $100 item. Besides that, I think what we really want here for for my mom to be able to go down to the store with her credit card and buy a loaf of bread is it to be exactly the same kind of financial experience that we used to, where I can, with Apple Pay, tap my watch, tap my phone, and simply have the money go where it needs to go. And I think integrating it into the existing financial payment infrastructure, which we have all over the world, is doing exactly that, because I don't have to necessarily learn a new model or a new way of doing things. I don't have to open my app and tap, and scan a code and do all of these things. I can simply pay the way I'm used to paying. And that, to me, really shows how any digital currency, but Bitcoin in particular, can not only be your day-to-day transactional financial tool, but also your long-term savings and bets on the future. So I think the easier we get, more moves like this, the easier wide-scale adoption and maybe the re-entry of the retail market, which we've been lacking in this current bull run, is to come to pass. So let's see what happens.
Yeah, I mean, I kind of feel like in order for a new payment system to be adopted, it needs to be at least easier to use than the ones that were predating it, right? Like credit card checks were easier to use than cash because nobody wants to carry a ton of cash around. And then credit cards were easier to use than checks because I can just swipe them. So it's like we need that technology to keep up so it's like as easy as like Apple Pay, because that's probably the easiest thing out there right now. We have our phones on us all the time, so I need to be able to scan my phone and use my Bitcoin quite as easily, and it looks like this payment platform through Square is getting us one step closer to that. So thank you, Jack Dorsey, for putting our money where your mouth is on that one. Another thing was that Lightning Network powers this whole integration. What's your take on Lightning? Are we finally reaching a point where it's actually ready for mainstream use? What do you think?
I think so. So, I mean, our other friend of the show, Anton, he's our product manager looking after all of our payment rails, and he'd be able to talk at length about Zappo's partnership with Lightspark and our integration with the Lightning Network and a bunch of their other projects. But what I can say is, I think Lightning is what enables any of this to happen, right? You talked about that 10-minute wait and for the block to confirm if you're lucky. If it's a mempool full kind of day, you could be there for an hour waiting for that transaction to confirm. Layer 2 networks, Lightning in particular, enable lightning speed transactions to occur, and that's really the epitome of ease of use, which is exactly what we were chatting about just now. As much as a check feels redundant in this day and age and many parts of the world, sitting around waiting for your transaction to clear for 40 minutes feels pretty redundant everywhere. And so without something like Lightning and Lightning being there, it makes that world of actual utility on a day-to-day basis harder to imagine. So to me, it's fantastic, and it's great to see Lightning as the layer that's going to enable this hopefully mainstream retail adoption. And it's the same network that's used in all of the products where I've seen that you can spend Bitcoin and where points of sale accept it. It's the Lightning Network that's underlying it, in my personal experience. And of course, Zappo Bank has been integrated with the Lightning Network for many years now.
Yeah. Do you feel like Square's move changes how Bitcoin-focused banks like Zappo think about payments? Like, could we see more integration between savings, custody, and day-to-day spending as a result of this?
I'd like to think so. And I think, look, if you put yourself in the shoes of a Zappo Bank customer, you have your Bitcoin stored as safely as it could possibly be. You have your bank card where you can spend that Bitcoin or US dollars, however you want. Or, a big life event happens, worried about your kids, you got to buy them that Lambo early. And so you take out a Bitcoin-backed loan with Zappo, and you pay for it using the Lightning Network at a point-of-sale machine that's powered by the same software. So you start to see Bitcoin as not only being an alternative financial asset, but actually as potentially being a primary financial asset that forms the bedrock of all of your day-to-day transactions and kind of long-term financial goals at the same time. Now, I'm not saying that'll definitely happen, and definitely never financial advice from me. I'm just Joe. But that's definitely a future that I personally would like to see and live in.
Me too, brother. I can't wait. Speaking of the future, we're going to take a quick break, but when we're back, we had 11 AI models predict the future of money, and you will never guess what they said. We'll be back to talk about it with Joe right after this break. Stay tuned.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. It's time for a little AIAIO. Let's see what our robot overlords are up to now. Because if they take over, they're probably taking Bitcoin with them. A group of tech degenerates recently ran a little thought experiment. They asked 11 of the top AI models on the planet what money will look like in the year 2225. Not maybe, not a few options. No, each model had to pick one, and only one monetary system to rule them all. And it turns out artificial intelligence is surprisingly bullish. ChatGPT 4o picked Bitcoin, Claude picked Bitcoin, and Grok picked Bitcoin. Even the AI models built by companies that actively hate Bitcoin picked Bitcoin. Claude said BTC has the strongest foundation for long-term survival. Decentralized, scarce, upgradable, immune to politicians trying to fix things. And Fiat Fiat currency, according to Claude, has a 35 to 40-year lifespan, so good luck making it to 200. ChatGPT 03 called Bitcoin's borderless, immutable ledger the best bet to outlast not just fiat, but anything yet to be invented. Grok, Elon's AI child, also said Bitcoin. Quen 3 Coder, Bitcoin again. The common theme is that Bitcoin's decentralized nature, its fixed supply, and its absolute refusal to play by anyone's rules make it apparently the cockroach of money. But not all the bots agreed. Pi AI and Mistral's LeChat got a little philosophical, if you will. They floated ideas like CBDCs or some sort of digital currency. They mentioned security, efficiency, environmental concerns, globalization. You know, the things that sound good in a keynote speech but usually mean surveillance money that you can't turn off. Venice AI and Gemini 2.5 Flash argued for a future with multiple CBDCs stitched together in a global web of interoperability. But nothing screams freedom quite like 200 years of central banks playing nice with each other. DeepSeek went full Blade Runner. It predicted a global resource-backed currency governed by a decentralized AI network. Why? Because fiat is unstable. Bitcoin apparently is too volatile, and gold is for boomers. According to DeepSeek, we'll all be paid in energy credits managed by our robot overlords. So if your paycheck comes in kilowatt hours, now you know why. Copilot went full cypherpunk, predicting a quantum-secure, decentralized digital currency, likely a descendant of Bitcoin, built for an AI-powered, programmable finance future. And then ChatGPT 4.0, they brought it on home. Even in a world of smart contracts, quantum chips, and AI-run economies, Bitcoin still emerged as the winner. Because when you zoom out 200 years, you want money that doesn't need permission, doesn't change the rules, and doesn't care about your government. Out of 11 AI models, most of them chose Bitcoin. The rest just proved why we need it. We're bringing back Joe to talk about this. Joe, 11 AI models were asked what money will look like in 200 years. Most picked Bitcoin. Do you think that's a meaningful insight or just a fun experiment with our robot friends?
It's certainly a fun experiment. Whether it's a meaningful insight or not is anyone's guess until we get to live for the next 200 years and see. But to be honest, I think what the analysis does point out is some of the things that we've all been saying in the Bitcoin community, at least for a very long time, which is the inherent flaws of the system we currently have. So I think at the very least, it's a reinforcement of what seems like common knowledge in this industry. And Bitcoin currently also is the only solution that we currently have to that in a way that is still practical and feasible and has utility. So they might be onto something, these AI guys. Maybe we should listen.
I think so too. I mean, to your point, the AI models pointed to Bitcoin's decentralization, its scarcity, and security as reasons that it would in fact last 200 years. Do those same traits shape how you build Bitcoin products over at Xapo?
Absolutely. So, I mean, we're building products for the financial future using the future of finance in and certainly from my perspective. And that means we need to think of ways that we can leverage this technology and leverage this asset on behalf of our users and our members and our customers all over the world to make the most that they possibly could. And for sure, security is at the core of everything that we do. The Fort Knox of Bitcoin, as we've been referred to in the past, our underground nuclear bunkers in Switzerland and other undisclosed locations forming part of our cold storage. Security is fundamental, and it's a core problem that all Bitcoiners have. I found the quantum linked currency from, I think it was Copilot, to be an interesting one. We know what they're up to over at Microsoft, I guess, at this point. But for sure, at Xapo, security has always been at the core of what we do, as well as Bitcoin.
Yeah, absolutely. And do you think that we will start to see AI influence how people invest, store, and move money in the next couple of years? And if so, how do you think Bitcoin fits into that future?
That's a great question, and I think absolutely. I mean, I think people are starting to use AI for everything. I'm having conversations with family members that were skeptical about Bitcoin, but they're prepared to take an answer off of whatever latest model is running on their Google search to make life decisions about health and all sorts of things. So, if people are using Gemini or whatever it is that they're not even aware that they're using, financial decisions are surely already probably involving that AI input and that AI guidance. Given this little survey, which I think is fun and a great thought experiment, but given that our friends over at the AI Overlord department that are obviously working with all of these models are saying themselves that Bitcoin is the answer that people are looking to in terms of something that's still going to be around 200 years from now. I would hope that what that means is our AI friends pointing users in the direction of Bitcoin as an individual.
Yeah. At Xapo, do you guys utilize AI currently with your processes and procedures of helping and building products for Bitcoin for your customers, or is that not part of the game plan just yet?
Well, that's a great question. I mean, I'm pretty sure I can share that we do use a couple of AI tools. I won't name them specifically as part of internal processes and kind of a couple of our different departmental functions. But I think AI is here to stay, right? It's not a passing fad. It's not a thing that's going to disappear overnight. And anybody who isn't kind of increasing their own productivity by using the tools that we have available to us is possibly missing on a trend, just like those same people who aren't, jumping on the Satoshi train. So hopefully we all play catch up and make it to the future.
Yeah, that's a great comparison. It's one of those things. It's like either learn to embrace it or be prepared to be left behind, and that goes with AI or Bitcoin right now. So I'm glad to hear you guys have your feet in both of those pools. Let's zoom out really quick here. Do you personally think that Bitcoin has what it takes to still be around 200 years from now? And if so, what does a Bitcoin bank look like that far down the line?
Oh man, 200 years into the future. I wish I could see, for my own personal sake, like 200 days into the future. But from a financial perspective, what does it mean for something to actually be able to survive for that long? In my mind, for anything to exist for that period of time, it needs to be something that is not only inherently, foundationally, technically very strong, but also something that is open enough to change as the environment around it changes. And Bitcoin is still open source. It's still being developed. It's still a product that a feature, a piece of software, a concept that if the community comes together with strong enough conviction that a new direction needs to be taken, that can happen. We saw that with Bitcoin Cash and with the old SegWit debate of 2016, 17, whenever that happened. And we could see it in the future if Bitcoin needs to evolve in a certain way in order to respond to a new technological or macroeconomic challenge. So I think just because Bitcoin is able to do that, I know it's not the only thing in the world or the only currency in the world that can do that, but because of where it is today and where we potentially see it going, and the fact that it is a currency and a technology that can adapt to the environment, I think it's certainly what I would put my money on. What does it look like 200 years in the future to be a Bitcoin bank? Oh, man. I wish I had an answer to that question. But I think certainly you need a team and a group of people and a product that is able to evolve and meet the possibilities of that future, something that we envision Bitcoin will be able to do. But man, I hope it's like got a lot of really cool techno kinds of vibes and like lots of neon flashing lights. If I think of the future, I go there immediately. And I imagine it can't be too different from the banking perspective.
Yeah, I think you're right. I mean, obviously, with this tech that is Bitcoin, you need a bank that's going to evolve with it and offer products. as the landscape changes, very much like what you guys do at Zoppo right now. So if I had to put my money on one bank to be the Bitcoin bank of the future, I think it'd be you guys over there. And we better be in line for some kind of Jetsons type situation. I thought we'd already have flying cars by now. I think the Jetsons are actually set in like the 2030s.
That's what I'm hoping for. Exactly that, man. Like where are my flying shoes? So I'm hoping the bank of the future includes that at least.
Yeah, I think so too. And by that time, I think your being and your essence and all of ours will be encapsulated in little like pills we can just put into robots. So I'm looking forward to you and I in robot form having this same conversation 2 years from now about the next 200 years of Bitcoin dominance. Yeah, put a reminder in your calendar that'll be transferred into the robot with your essence of your being. Joe, always a pleasure to have you on the show. Thank you so much for your time today. Before we let you go, I'm sure a lot of people in our audience are like, hey, this Zoppo, if it's going to be around for 200 years, I better get some more info on it. What's the best place for me to send them so they can learn more about Zoppo, you, and all the amazing things you guys are doing over there?
It's an amazing point, Hank. They can go to zappobank.com. It's our website. From there, you can read all about our products. I'll say that again. zappobank.com, XAPO, because we offer a huge amount, I think a lot more than everybody necessarily immediately realizes, and you can read all about all of our incredible Bitcoin-backed products there. And feel free to hit us up on LinkedIn or Twitter or any platform where you see our Zoppo Bank officials accounts, and always more than happy to answer any questions you have. We have an incredible team of relationship managers and account managers who will be there to support you through anything that you need.
Love to hear it. Joe, always a pleasure. Thanks for joining us, and we can't wait to have you back again.
Thanks so much, Hank. Cheers.
Cheers. All right. Joe, he's just the best, isn't he? He's the best. Everybody says so. Speaking of things everybody says, President Donald Trump is telling everyone that he doesn't like the name artificial intelligence, not because of the policy implications or because of the existential risks. No, he's not concerned about those. In fact, he just doesn't like the word artificial. At an AI summit on Wednesday, Trump told a crowd of tech moguls, "Artificial? I can't stand it. I don't even like the name." And then he asked if they could straighten that out. His suggestion, rename it to genius intelligence, because obviously that is much less terrifying. Trump explained that I don't like the name artificial anything because it's not artificial, it's genius. Per genius, pure genius. So there you have it. GPT is now GI. This renaming campaign came right after the White House dropped its new AI action plan. Among the highlights are streamlining regulations and permits so companies can rapidly build data centers and power sources, pushing U.S. AI models into foreign markets to ensure dominance, and a new loyalty test. The federal government will now only work with AI companies whose models are free from top-down ideological bias. Or in other words, if your chatbot leans left, no government contracts for you. Trump also nuked Biden's executive order that favored companies with DEI programs and climate goals. We're getting rid of woke, Trump said. It's so uncool to be woke. He railed against partisan bias and critical race theory, calling the latter ridiculous. And he warned that woke AI models won't be tolerated in the US or anywhere else. We will only work with AI that works with the truth, he declared. And Trump also admitted AI is risky, but he insisted the US must win the race against China. He signed 2 executive orders on the spot and made sure to point out that he wasn't using an auto pen because obviously that matters. Good luck, he told the tech execs as he wrapped up. The race has just begun. And apparently the rebranding has too. Welcome to the era of genius intelligence because artificial didn't test well in the focus group. All right, we're taking a quick break. When we're back, we got Blockchain Without Borders and our special guest interview of the day. Stay tuned, all that and more coming up on the Blockchain Report. All right, welcome back. It's time for a little Blockchain Without Borders. Let's see what's going on in other parts of the world. because another day and another company has given up on Fiat. We're talking, of course, about Kitabo Co. Limited, a 7-year-old Japanese textile manufacturer listed on the Tokyo Stock Exchange, has officially had enough. After years of bleeding cash and watching their balance sheet unravel like cheap polyester, the company has decided to start stacking Bitcoin. They plan to dollar cost average 800 million yen worth of it. That's about $5.4 million in sound money for the formerly synthetic yarn kings. Now, Kitabo announced the move as a full-scale entry into both the cryptocurrency and real-world asset business. Because apparently nothing says we're evolving quite like switching from thread to thread count on the Bitcoin ledger. The company has been hemorrhaging cash as of late, specifically 115.6 million yen in net losses during the fiscal 2024 year. And when the cash flow dries up, there's really only one place left to turn. So now, Kitabo joins a growing list of Japanese companies adopting Bitcoin as a treasury strategy. And it's not just about stacking. They plan to use Bitcoin for cross-border services, international partnerships, and even yield generation by lending their coins to crypto lending platforms. Because who needs interest rates from a bank when you can loan out your BTC and actually make money? They're funding the buys through a 4th series of stock acquisition rights, and they're using local exchanges, probably not FTX Japan, just to be safe. Kitabo is following in on the footsteps of Metaplanet, the hotel company turned Bitcoin mega hodler, which now sits on over 1,600 Bitcoin worth just under $2 billion. And let's take a peek at what Metaplanet is up to over at BitcoinTreasuries.net, the #1 place on the web to see what public companies are holding Bitcoin and how it's affecting their balance book. So let's go to camera 3 and take a quick peek at that, please. All right. Great, so BitcoinTreasuries.net, and what you can see right here is the official leaderboard of the top public holders in this space. And if we scroll down here, let's see. Right now, Metaplanet has actually dropped down to number 6 because Trump Media and Technology Group just bought like $2 billion worth of Bitcoin and Bitcoin-related entities in the last couple of weeks here. So they've nicked the number 5 spot. But let's go to Metaplanet here at number 6 and take a peek. So when we click on them, you can see they're the highest ranking non-United States company that's currently on the list. And if we click on Metaplanet here, let me take a little click. Oh, wow, they're actually at 7 now. I retract that. We got a couple people that are above them. All right, so let's see. We can see right now their total Bitcoin holdings over 16,000 Bitcoin. That's about $1.95 billion worth. Their average cost price, you got 99,502 per BTC, and right now they're up almost 20% on their Bitcoin holdings, so not too bad. And then you can even check out, with American companies at least, how this is affecting their share price. We don't get into that because they're actually on the Tokyo Stock Exchange. Nonetheless, BitcoinTreasuries.net, best place on the interwebs to check out what your favorite public companies are doing with their Bitcoin stashes. It's updated daily, so take a peek. It's a great resource to take a look at. All right, let's get back to camera 1 here, please. So Metaplanet, as you saw, is now actually down to 7th place on the list, ahead of Galaxy Digital's stash, which is around 13,000 BTC, and trailing only Trump Media and Technology Group's ridiculous $18,430 430 Bitcoin war chest. Again, they just themselves reached up into the group, and then of course we got Strategy, Mara, 21 Capital, them all leading the way. Also in the mix, though, is video game giant Nexon. They not only bought Bitcoin, they accept it as payment. Currently, they hold around 1,700 BTC, which is valued at today around $203 million. But the real story here is Japan isn't just dabbling in Bitcoin, they're diving straight in. And Kitabo, the once forgotten yarn manufacturer, is now hoping to stitch itself into the future of money, one sat at a time. All right, we're going to take a quick break, but when we're back, we should be having our guest of the day joining us. It's a surprise. You're going to want to stay for that. You won't want to miss it. We'll be right back. More Blockchain Report after this. All right, welcome back to this morning's bull run. Well, it looks like July has the Bitcoin bulls riding high, but August? Well, August is where optimism goes to die. Statistically, it's the worst month in Bitcoin's entire price history. We're talking minus 8.3% median returns during the month of August, averaging out to 0.23% overall. And if you look at the last 3 years, 2022, down 14%, 2023, down 11.2%, last year, 8.73% down. It's like Bitcoin sees August on the calendar and instantly loses the will to live. And sure, 2021 saw a 14% increase, but that was in the middle of a raging bull cycle, which we're supposedly in right now. So maybe, just maybe, this time will be different? I don't know. But don't bet your sat stack on it, because right now, Bitcoin's floating up around 119K, up 11.3% for the month of July, but momentum is already flattening just below that 120K resistance zone, which means unless someone drops a fresh ETF announcement or Michael Saylor eats another billion-dollar breakfast, the price could start free falling faster than a Solana validator on a mainnet launch day. The real problem is that August doesn't wait around. Historically, the pain starts early. Sharp pullbacks tend to hit right out the gate, especially in years where July saw major gains. It's a textbook mean reversion setup. So while the July chart has been a green candle parade, the calendar might still crush the mood like a Powell press conference on a rate hike day. Bulls have 9 days left to enjoy the July sunshine. After that, it's shark-infested waters. And unlike Shark Week, this one doesn't come with warning music. So August, watch out. All right, so next up, I'm excited to announce today's special guest, okay? This guy, he's a CFA charter holder who walked away from the traditional finance world to help people actually understand their money. He's helped his clients crush debt, build wealth, and find financial clarity, all while onboarding thousands into Bitcoin in the process. With a 250,000 strong following, a thriving education platform, and a passion for making complex topics simple, he's become one of the most trusted voices at the intersection of personal finance and Bitcoin. Please give a big blockchain report welcome to the one and only Rajat Soni. Welcome to the show, Rajat. Boy, our audience is loving you, and it is an absolute pleasure to have you on the Blockchain Report this morning. How are you on this Thursday?
I'm doing great. Thank you so much for having me. And that was a really great intro. I wasn't expecting that.
Oh, well, you were befitting of a great intro, so it would be a shame for me to let you down with a bad one. So I'm glad you enjoyed it, Rajat. Now, for our folks at home who are meeting you for the first time, could you give us a quick backstory? How did you go from a decade in TradFi to becoming a full-time Bitcoin and personal finance educator? What was that like?
Yeah, for sure. So I did an undergrad in finance and an undergrad with major in accounting and a minor in finance. After I left school, I went to work at a bank as a financial services representative. Then I went to a brokerage, worked there in customer service, and then I moved up over time. Eventually, I was working in fixed income as an analyst. And I think one of the biggest problems that I saw is that most people don't quite understand the issue with inflation. As long as they get a 1%, 2% return on their assets, they're okay with it because they think that they're getting free money. They just want that nominal number to go up. They don't really care about the true purchasing power because they haven't even thought of it as being stolen from them, because they have to work for money while other people can print it. To them, it's all about just having as much money as possible. They don't quite look 10, 20, 30 years into the future. Most people have a really difficult time zooming out. They're very zoomed in because everything that they're doing is on a day-to-day basis. They see the problems that they have daily. They don't really think about what the problems that they'll have are in the future. And because of that, they don't make the right decision. So the way that I do things is I try to explain from first principles why the current financial system is broken, how your misunderstandings are being used to make a profit by the banking system. So the banking system is literally designed to extract as much value from people as possible. And one of those things is through lending. If you're poor, they lend to you at a high interest rate. If you're rich, they lend to you at a low interest rate. And believe it or not, most people don't even know the difference between a high and low interest rate. They don't even understand how interest is calculated. This is how the system is designed. And I mean, my goal is just to help people to get through that, to navigate it so that they don't get screwed over by the exact same system that they're trusting and they're holding their money in, to understand them that when you have money in the banking system, that's not your money. It's their money. It's just an IOU. It's literally just an entry on a spreadsheet saying that they owe you something. You think that you own it, but you really don't.
Yeah. Well, we're super excited to have you, your expertise, and your perspective, because we got a story that I think is going to hit pretty close to home for you. I actually saw, I think you did a video about why just owning 0.1% or zero point 0.1 Bitcoin could eventually change your whole life if you're willing to look, in the months and years rather than just day and weeks, as you just kind of spoke about. So having that long-term point of view is everything, right? So stay tuned, Rajat. We're going to be back with you in a sec, because owning one Bitcoin in 2025, well, that's not degen. That, my friends, is elite. According to blockchain data, there are somewhere between 827,000 and 900,000 addresses with one Bitcoin or more. But once you weed out the exchanges, bots, and paranoid whales splitting their stash across 300 wallets, we're talking about maybe 800,000 actual humans out of 8 billion. That's less than 0.02% of the global population. So if you're in the one Bitcoin club, congrats, you're rarer than a 2-parent household in San Francisco. Even among crypto holders, a group of about 560 million worldwide, fewer than 2 in every 1,000 hold a full coin. To own one Bitcoin today, you need around 120 grand and the courage to park that cash in something that drops 30% whenever Elon tweets vibes. Now, most people can't stomach that or afford it. There are 16 million millionaires in the world today, and yet fewer than 900,000 of them own a full Bitcoin, which means owning one BTC is now rarer than being a millionaire. Take that, yacht club. And let's not forget the hard cap. There will only ever be 21 million BTC. Over 19.8 million are already mined. And between lost wallets, early adopter hordes, and whatever Satoshi's ghost is sitting on, the available float is microscopic. In fact, 4 addresses control 14% of the total supply. The top 100 hold over 58%. So if you're asking, is one Bitcoin enough? Yes, because most people will never even get close to that. Add in rising tax scrutiny, complex on-ramps, and the fact that most adults in the world don't even have a bank account, and that full coin gets even harder to reach. And if you've got access, there's still fear. Volatility, hacks, regulation, Warren Buffett calling it rat poison squared, it all scares people off, which is why dollar cost averaging remains the most sane path to full coin status. Unless, of course, your name is Odell Beckham Jr., who converted $750K in salary to Bitcoin in 2021 and would now be sitting on 1.35 million. As for Satoshi himself, he's still got 750 to 1.1 million Bitcoin locked up, worth between 92 and 135 billion dollars. That's not early retirement money, my friends. That's vanish from human history money. So if you're holding one Bitcoin in 2025, guess what? You've made it. You're statistically, economically, and culturally a digital elite. Now, try not to lose your seed phrase, okay? All right, we're bringing Rajat back to the fold. Rajat, let's start here. Fewer than 0.02% of the global population holds one full Bitcoin. Why do you think hitting that milestone feels so significant to people, both financially and psychologically?
I think it's the law of just whole numbers. People want a whole number. They want one. They don't want half. Like if you're a billionaire and at some point you're only able to get to, let's say, 0.98 Bitcoin. At some point that's going to be the case because there's only 21 million. You're going to do whatever you can to get that last 0.02 because one whole Bitcoin, I mean, I don't really, so the way that I see it, one whole Bitcoin for an individual is actually too much money. At some point it'll be way too much money. You're not going to need that much money. What are you going to do with $100 million, right, in purchasing power?
Yeah.
You're not really going to be able to, well, how many steaks are you going to eat, right? How many mansions are you going to buy? We know that with Bitcoin, the purchasing power of everything else will decrease in terms of Bitcoin if we do go to a Bitcoin standard. So once you do move to a Bitcoin standard, you start seeing that you don't really need as much money as you think. On a fiat standard, though, it's the opposite. With fiat, you need more and more money over time. There's a really great quote. I think it's Charlie Munger who says it. The first 100K or the first million is the hardest. And it's absolutely true, because with fiat over time, because the fiat is losing value, it becomes easier and easier to accumulate it. You can get more and more of it more easily. On the other hand, with Bitcoin, it becomes a lot more difficult to accumulate Bitcoin over time. So if the price of one Bitcoin goes from $1 to $1,000, it just eliminates a ton of people from ever being able to buy a whole Bitcoin, because not everybody can afford $1,000 worth of Bitcoin. And then if it goes from 1,000 to 10,000, again, it eliminates another huge amount of people from being able to afford one whole Bitcoin. Then it goes from 10,000 to 100,000. Eventually it'd go to 1 million. And at that point, the way that people see one Bitcoin today, they're going to be looking at 0.1 Bitcoin, because 0.1 Bitcoin will be worth $100,000. And over time, it becomes harder and harder to accumulate the same amount of Bitcoin, because it gets more and more expensive. Your income isn't going to increase most likely as fast as Bitcoin does, unless you have, let's say, your own business. You're cutting costs the most, as much as possible. Your income isn't going to increase as much as Bitcoin's price is going to increase, because nothing can keep up with the Bitcoin network. It's the only truly finite asset. Even if you have a business and you're making massive profits, somebody's going to try to take part of your profits. So there's always competition. So over time, it becomes more and more difficult to accumulate 1 Bitcoin, 0.1 Bitcoin, 0.01 Bitcoin, whatever the amount is. Over time, it becomes more and more difficult to accumulate it. And because of that, you're going to see that, at least this is what I think, the number of whole coiners is actually going to decrease, because even the people who own Bitcoin, let's say you said 0.02%, was that the number? 0.02%?
Yeah.
If that's the number, then what you're going to see is that that's going to drop, because even the people who own Bitcoin don't completely understand it. And then there are people like Michael Saylor, who every time he buys 1,000 Bitcoin, he's basically eliminating 1,000 people from owning one whole Bitcoin. You can buy MSTR, but you can't get that Bitcoin. You're not going to be able to get that Bitcoin, because that Bitcoin is MicroStrategy's. The equity, the stock, the MSTR, is going to give you exposure to that Bitcoin, but you won't own a whole Bitcoin. So if you have, let's say, a Bitcoin's worth of MicroStrategy stock, you're not a whole coiner. You own one whole Bitcoin worth of some derivative with the underlying being Bitcoin. It's an IOU. I'm not saying that MSTR stock is a bad thing to own. It could outperform Bitcoin. They could create a line of business that makes it so that they're valued at much more than the Bitcoin that they have. But the point of Bitcoin is to be a bearer asset, so that nobody can screw with you, right? Nobody can mess around with you. Nobody can take your wealth. With MSTR, they can. With Bitcoin and cold storage, nobody can take that. Nobody can take it away from you. That's the value. And then the bias where people want that whole number, that entire Bitcoin, that obviously plays a role in this, because people want a whole Bitcoin. They're taking a whole Bitcoin off the market. And as more people actually get to that whole Bitcoin, or even as more people compete to get to a whole Bitcoin, the possibility of you getting a whole Bitcoin if you don't have one already decreases. So it's a cycle where, as Bitcoin's price goes up, as it becomes more difficult to buy one whole Bitcoin, MicroStrategy's power to buy more Bitcoin goes up, and they can continue to buy more Bitcoin and eliminate more whole coiners. And again, it just keeps going. I think that a very small number of people who actually own Bitcoin today, who own a whole Bitcoin today, actually understand it. And I think that they'll eventually start selling, and they won't have a whole Bitcoin at some point.
Yeah. So you brought up an interesting point. I love talking about the human psychology of this. And we had Bloomberg analyst James Seyfert on the show yesterday, and him and I kind of got into this, and I would love to get your perspective. I feel like we're at an interesting human psychological impasse when it comes to the price of Bitcoin, right? Because right now we're at 120K, near that, close to the all-time highs. And we're at a point where there's a lot of people that might be interested in getting Bitcoin, but they're thinking, I'm priced out. I can't afford a whole Bitcoin, right? Because we're, like you said, we're thinking these things in whole numbers. There's a real big psychological element to it. How big does Bitcoin need to get when people start to realize, I don't need a whole Bitcoin, I need 0.1? Do we need Bitcoin to be $1 million a coin for all of a sudden people to realize, like, hey, even 0.1 Bitcoin is pretty darn good? Because I feel like people right now, it's either I'm getting a whole coin or I'm too late for the boat. Do you think there's a point on this journey to the next high of like 1 million where people are going to be like, oh, okay, we don't need to own an entire coin?
I think that's already happening. People are okay with buying fractions, and they're proud of owning, let's say, I get a lot on my YouTube channel, I get a lot of comments from people saying, oh, I just got to 0.2 Bitcoin, or other people saying I got to 0.03 Bitcoin, and they're getting more excited about it. Before, I don't know if you saw this, but there was a comment on one of these Bitcoin talk forums where somebody was saying how they had 600 Bitcoin and they feel like they're behind. That's the kind of conversation that people will be having. They'll be saying, I have 0.006 Bitcoin and I feel behind. I need to get to my 0.01. Or I have 0.00 or 0.098 Bitcoin. I need to get to my 0.1, and they're going to put everything they can to get to that 0.1 because, again, as the value goes up, people's frame of reference also changes. In the past, when Bitcoin was at 15K, when it was right after FTX collapsed, people were thinking I can get to 1 Bitcoin. It was actually possible because if you think about it, 1 Bitcoin was probably a third to a quarter of somebody's annual income, while now 1 Bitcoin for the average person is probably more than double what their annual salary is. So it's like thinking about houses, right? So today most people can't afford a house because the price is just way too high. So they have to take on a mortgage, and the current financial system is designed to make sure that they can get that house, they can bring their future consumption to the present so they can buy that house and they can make that lifestyle decision that's actually extremely expensive. With Bitcoin, that's not the case. Not many banks are willing to give you a loan to specifically buy Bitcoin. So with Bitcoin, you can't really think of it the same way as houses. A lot of people do think of it the same way as houses, but you can't really think of it the same way as houses. With houses, you can only get one. You can only get one. If you have what are you going to do with 0.03 of a house? If somebody breaks apart a bedroom and gives it to you, what are you going to do with it? You can't really do that, right? But with Bitcoin, you can actually have a fraction. There are people of all levels of wealth around the world who are accumulating Bitcoin. So what that does is it pinpoints all of the wealth into one asset. Instead of it being distributed with a bunch of other assets, the wealth is just basically focused on one asset, and it makes it so the price will continue to go up. And because Bitcoin is a Veblen good, more people will want it as the price goes up. More people will want 0.1 Bitcoin when it's worth $1 million, right? More people will want 0.01 Bitcoin when it's worth $1 million. I think the way that I see it, most people ignore Bitcoin until whatever amount that they want to get to is unaffordable for them. So people will ignore 0.1 Bitcoin until they can't even touch it, right? People will ignore 0.01 Bitcoin until it's way too far out for them. That's exactly what happened with 1 Bitcoin. When 1 Bitcoin was 1 cent, I was ignoring it. I thought it was a scam. I thought it was a Ponzi scheme or whatever other thing people say to say that, oh, you shouldn't own Bitcoin. But now that the price is going up, it kind of made me study it harder, to try to figure out why the price is going up and question it more. But when the price was low, I didn't really care.
Right. Yeah. Again, the psychology behind it is so interesting because, like you said, people won't be paying attention to 0.1 until it's too much for them to afford, and then we're going to hear that same sob story. Oh, I should have bought it back when it was this number. But it is nice to hear that you're seeing in the forums that people are actually starting to make more or smaller and realistic goals for how much Bitcoin they can acquire because, like you said, right now it's double the average salary just about. But for someone who's out there in our audience who's trying to join the 1 Bitcoin Club, but they feel like they're too late or they just don't have the funds currently, what would be your go-to strategy or mindset advice for them to making or getting to that full first coin?
So the way that I see it, I have basically like a plan on how to do this. So the first thing is, of course, create as much value as you can. Do whatever you can to create value, sell that value to people. If whatever you're selling is valuable enough, people will buy it from you. They'll pay you for it. Like I used to think, oh, nobody wants consultations with me. But now people are willing to pay $300 an hour to consult with me, to talk to me about Bitcoin. And over time, I've increased that price. So over time, in the beginning, it was at $60 an hour. Then it went to 70. Then it went to 80. And even with that, like I'm basically a Veblen good. My service is a Veblen good. As the price goes up, more people want to book with me, right? So over time, as you create value and you become more of an expert in whatever you're creating, people will pay you. You have to be confident in believing that people are willing to pay you. That's the first thing. So create value, sell that value to other people, accumulate as much value as you can. after you start creating value, you'll be able to buy as much Bitcoin as you want to. Like at some point, today you might think that $10 worth of Bitcoin is too much. At some point, you'll think $10 worth of Bitcoin is something that you can afford regularly. And then over time, you'll go to $100 worth of Bitcoin every month, then $1,000 worth of Bitcoin. I actually know people who went from buying basically zero to buying $10,000 worth of Bitcoin every single month because they're creating value, because they have a plan to produce as much value as possible, and the world is willing to pay them for it. And they've put in the time to become an expert in whatever they're studying, whatever they're learning. And again, the way that I did it was I started with Instagram, I started with Twitter, then I went on to YouTube. Over time, I've noticed that more and more people do want to learn about what I'm talking about, and I've put in the time to understand what I'm talking about, and I can answer the questions that people have. So people will give you value. They'll give you their money in exchange for whatever value you have. And again, create that value, accumulate Bitcoin. And I think, like you mentioned before there, you mentioned that DCA is the best way to go, and I completely agree. Buy Bitcoin as a savings tool. Use Bitcoin as a way to save for the future. Don't try to time the market. It's extremely difficult. It might work for you once in a while, but if you try to do it over and over and over again, there are chances that you're probably going to end up being wrong. If you have all of your money on the sidelines, I met with somebody who had 150K on the sidelines and they were hoping for a dip. And when Bitcoin's price dipped to 75K, this was a couple months ago, I think it was, when Bitcoin's price dipped to 75K, they said, no, it'll go lower. At the time, they could have bought 2 whole Bitcoin. 150K could have been turned into 2 whole Bitcoin. Now they can barely even get 1.5. So if you try to time the market, it might work for you, but trust me, when the market does what you want it to, you're going to want it to go even lower. You're going to want it to go to 60. If it goes to 75K, you're going to want it to go to 60K. Then if it goes to 60K, you're going to want it to go even lower, then lower, then lower. I know a lot of people who do this. Right. So the way that I see it, create value and just convert it into Bitcoin. It doesn't matter what the price is. Eventually, every single price is going to be a rounding error. Bitcoin is going to run out at every single price. It doesn't matter what price you buy it at. Eventually, that price will be something that other people are hoping that they can buy Bitcoin for. So if you're buying Bitcoin for 120K today, 10 years from now, people aren't even going to be able to imagine buying Bitcoin at 120K. So instead of hoping in the future that you can come back in time, think of it as you are back in time right now. Buy Bitcoin today because in 10 years, you're going to want to go back in time so you could buy more. It's like if you ask somebody, if you could go back to 2018 and buy Bitcoin, would you do it? They'd 100% say yes. But in the moment, they wouldn't have done it because it was too risky. They didn't understand it enough. Today, you have that opportunity to basically go back in time so that in 2032, 2033, 2035, if somebody asks you, would you go back in time to 2025 and buy Bitcoin? You don't have to say yes. You can say, I already did it.
Yeah, it's like no matter what price you buy Bitcoin for right now, whether it's 120 or 75 like it was a few months ago, if you go fast forward 10 years, you're going to look back and say, oh, that was the steal of the century. Right. So it's like we get caught up in this and what things cost right now. But like kind of like Michael Saylor says, everyone I don't buy is $13 million I won't have, in like 10 years, whatever, 20 years from now. So no, I totally feel you on that. That makes a lot of sense. I think that's a great mindset to get in as you're trying to build your own BTC treasury, personal one, of course. The story also mentioned that there are 4 addresses currently that control 14% of the Bitcoin supply, and the top 100 hold over 58% of the supply. Does that concentration concern you at all, or is that just part of how early we still are in the Bitcoin journey?
I think it's about how early we are. And there's nothing really. I don't try to. I don't concern myself with things that I can't change. Like if I can't change history, those people bought that Bitcoin. They have that Bitcoin. They mined it. Whatever they did, they have that Bitcoin. I can't take it away from them. So why would I really concern myself with it? The way that I see it, I concern myself with accumulating Bitcoin for the future. And the reason for that concentration in those 100 wallets, 4 wallets, whatever the numbers you said were, is because most people don't understand Bitcoin. They don't understand it. They don't care about it yet. They don't want to accumulate it because they don't see the value in it. And over time, as people do see the value in it, maybe those people who own that Bitcoin will redistribute what they have to other people. And then as they redistribute it, the people who buy it may never want to sell it again, and they may just want to hold on to it as long as they possibly can. So the way that I see it, there's nothing I can do about the concentration. The only thing that I can do is I can buy it for myself. And over time, if they do sell their Bitcoin, the good thing is that they can't sell it twice. They can only sell it once. So if they sell it once, it's gone. There's nothing they can do about it. There was, I don't know which, I think it was Germany, but other people have told me that it wasn't Germany that sold 50,000 Bitcoin. It was another state, a specific state that sold Bitcoin. But what happened there was they sold.
Yeah.
Sorry, who was it?
Germany definitely sold quite a bit, and they were kind of rigged.
Germany,
the
yes.
polls.
I think it was 50,000 or something. Yeah. But I mean, the point is that if they sold their Bitcoin, they can't sell it again. So if these people with these massive amounts in their wallets, if they sell it, it's not like they can sell it twice or 3 times or 5 times. They can't rehypothecate their Bitcoin. And the only thing that you can do to make sure that they don't rehypothecate their Bitcoin is take self-custody. So stop being concerned about what other people have. Worry about yourself. Focus on getting to 1 Bitcoin instead of focusing on what other people own. I think this is what the audience needs. Focus on what you can do for yourself instead of what other people own. If they dump and the price comes down, use it to your advantage. If Satoshi Nakamoto comes out and says, "Oh, I have 1 million Bitcoin, I'm going to start selling it all," the price is going to come down. Of course, that'll be temporary. Eventually, it'll come right back up. Right now, people are not buying Bitcoin because they think, "Oh, Satoshi has 1 million. He might dump at some point." If he dumps, that stigma is gone. What that means is Bitcoin can reach even higher prices now because those people have no claim to say that, "Oh, this one individual has 1.1 million Bitcoin." So everything, the way that I see it, everything is good for Bitcoin. The way that I see it, everything is good for Bitcoin. For all we know, those wallets that have that 58% of the supply, I think it was, maybe they're lost. Maybe they'll never be recovered again.
Right.
And nobody can prove that.
Yeah, that's a great point. I mean, I think people forget a lot of the times that they estimate it's like could be anywhere between 1.5 and like 4 million Bitcoin that have been mined are lost into the abyss, right? Whether they're in that hard drive in that dumpster in England or somewhere else. So it's like we talk about this 1 in 21 million, but it might end up being like 1 in 18 or 1 in 17 million or something. And part of me wonders, like, are we even factoring that in at all with the current price? Because Bitcoin could be a lot more scarce than we even think it is currently, you know? And lastly, in regards to this story, go ahead, please. Yeah.
Oh, I just want to say, I don't really think of it that way. I know that there's a ton that's lost, but there's no proof of it, right? We can't confirm, like, we don't know how many coins are actually lost. So I always think the worst case scenario is that there's 21 million Bitcoin. The best case scenario, maybe there's 10 million for all we know, right? So either way, if there's 21 million, you're doing great. If you have 1 out of 21 million for the entire world, you're doing great. But if you have 1 out of 10 million, that's the best case scenario for you. I mean, what's the problem with that? I think that's a great situation to be in.
Yeah, no, absolutely. And now today we got the price sitting around 119, right? Do you think that the idea of owning 1 full Bitcoin is still the benchmark today? Or should we start shifting the narrative to stacking sats instead of chasing whole coins? And will that kind of, if we change that narrative, do you think that will change how the public perception of Bitcoin is if we start thinking in sats rather than full coins?
The way that I like to look at it is shoot for the stars. Just shoot as far as you can, aim as high as you can, because at some point you'll land and you'll get a lot further than you expected. For example, if you expect to get to 0.01 Bitcoin and you get to 0.01 Bitcoin, your goal is to get to 0.01, you get to 0.01. Are you going to stop pushing yourself? If you are going to stop pushing yourself, if you know that you're going to stop pushing yourself and you're going to stop accumulating more, then maybe your goal should be higher. But it really depends on the person. So sometimes it really depends on the individual, right? So some people are, if they see a goal that they can't achieve, then they're not even going to go for it. They're just going to stop trying. Yeah. But other people, if they have a goal that they theoretically think that they can't achieve, they'll do whatever they can to actually achieve it, to get to 1. So it really depends on the person. I would say if you're in North America, I know not everybody in North America can get to 1 Bitcoin. I know a lot of people don't have the means to do it. But the problem here is that the people who do have the means, they're not doing it. They're not even trying. I know so many people who have real estate, who have tens, hundreds of real estate properties, and they're just brushing Bitcoin aside. right? So if you're one of those people,
Yeah.
getting to 1 Bitcoin could be massive because it's a hedge against your portfolio. Let's say you have $10 million worth of real estate and real estate's value is trending to zero in terms of Bitcoin. If you have 1 Bitcoin, in a few decades, that 1 Bitcoin will be worth more than your entire real estate portfolio. But if you don't have that Bitcoin,
Right.
then there's nothing there's nothing that's basically a backstop. So your portfolio, if you have 0 Bitcoin, your portfolio will trend to zero in terms of Bitcoin. But if you have Bitcoin, it'll trend to whatever your Bitcoin value is. So if you have a $10 million portfolio and you have 1 Bitcoin, the value of that portfolio is going to trend to 1 Bitcoin. It doesn't matter what the dollar value is because the value of those houses is going to keep decreasing in terms of Bitcoin. So the way that I see it, get to whatever you can. If you can get to point one, get to point one. But if you get to point one, keep going. It's a savings vehicle.
Yeah.
You create value and you put it into a savings vehicle. That's the main goal here. The goal here is to get as much value as possible, to create as much value as possible. Because if you're not creating value, then what's your point of even existing? Your point should be to create value, convert it into the hardest money in the world, and then over time, you will be able to live a life that you truly enjoy, that you truly want. You won't be forced to go to a 9 to 5 when you don't want to. You'll be work optional. I think that's the end goal for me. That's the way that I see it. I know a lot of people who I speak to. I do a lot of one-on-one consultations. Everybody in those one-on-one consultations, it's not that they want to retire. It's that they want to do something that they actually love. And to do something that you love, you can't have those restrictions of, oh, if I don't go to work today, then I'm not going to be able to pay for food. But if you go to work, you're wasting 8 hours of your life building somebody else's dream. So right now, while you're building somebody else's dream, you're working for somebody else, create something of value on the side and get to whatever amount of Bitcoin you can. It doesn't really matter what the amount is. If you can get to 0.1 Bitcoin, amazing. But if you push yourself to get to 0.2, that's even better. If you push yourself to get to 0.3, even better. If you can get to 0.01 Bitcoin today, that's fine. That's a million Satoshis. At some point that'll be worth something, but it'll take you a lot of time to actually get to that point where you can use that Bitcoin to actually retire. So what I say is, in general, keep accumulating. It doesn't matter how much Bitcoin you have. Even if you get to 1 Bitcoin, try to get to 2. If you have 2 Bitcoin, get to 5. It's a game. Everybody's in this game. Everybody's in this race to accumulate as much Bitcoin as you can. So why wouldn't you just go all out if you could?
Yeah, that's a great point. And I think you just coined my new favorite phrase, work optional. I'm hoarding Bitcoin so I can be work optional one day. I love it here, so I'm not going anywhere. But other types of work, I want that to be optional.
Yeah.
All right, we're going to take a quick break, Rajat. When we're back, we're going to go on our deep dive with you and see all the amazing things you're doing. So all of our audience at home, stay tuned for that. We'll be right back. More Blockchain Report in just a sec.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. It's time to get into our deep dive with Rajat Soni. Now, Rajat, I want to bring it back a little, start at the beginning, because you have a very interesting journey here professionally. You got a CFA, a finance degree, spent nearly a decade in traditional finance. What first drew you to the world of money? What got you there?
So I started studying money and started studying personal finance in, I guess, in high school, in university, when we had these finance courses. I didn't really care about it. I didn't really understand it. I think regardless of how much you study Bitcoin or you study the financial system, you're not going to really come to Bitcoin until somebody really pushes you into it. Because the legacy financial system, so I have my CFA, the Chartered Financial Analyst designation, and one of the problems that I have with the CFA, the CFA is great. I mean, I don't know anything about the institution. I don't really know. I don't know if they're trying to change what they're offering. But the problem with the CFA is that you never look at the financial system with the lens of potentially replacing the currency. That's one of the problems. There's no mention of that. There's no mention that there is competition for the money and that it could be replaced if enough people don't want it. If people don't want the US dollar, then it's going to go to zero. And there's no mention of that. So you have to kind of separate yourself from the legacy system to really see that, to understand that that's the possibility. Because if you stick to the legacy financial system, you're always going to think that the way that things are perfectly fine. If you can own a house, then if you don't have enough money to buy a house, you can borrow it. Your bank can just create it out of nothing. And that's where things are completely different with Bitcoin. You can't create it out of nothing. That's the hardest part. Most people can't wrap their heads around the fact that you need yield from legacy assets because the money is dying. The money is literally dying. If you don't get yield for real estate, let's say you can't rent your property out, then what's the value of that house? How many houses do you really need? In the current financial system, the one that we're in right now with the dollar, you kind of have to extort other people. You have to take value from them. You have to ensure that they are paying you because otherwise you're not going to be able to survive. So what we see today is that a very small group of people is being supported, landlords namely, are being supported by people who are renters, people who rent their property from them. So if those renters disappear, then does the entire system collapse? If enough houses are built and they're cheap enough, does the entire legacy financial system collapse? Because the entire financial system is built on top of real estate. And again, I didn't really come to these conclusions until I started studying Bitcoin, until I started putting the time into Bitcoin. I came across a lot of random altcoins, a lot of random garbage coins that are trying to replace Bitcoin, that are trying to potentially be a medium of exchange while Bitcoin is the store of value. But there are a lot of problems there as well. And as I study Bitcoin more, as I learn about it with an open mind, I figure out that pretty much everything else is a scam. And it's hard to come to that conclusion. It took me a very long time. It actually took me 4 years to get to that conclusion. Otherwise, I mean, if I hadn't kept studying, if I had just given up, let's say after a year, for all we know, I might have been an altcoin promoter right now if I hadn't put in the time to understand what Bitcoin is. If I had just gone from studying Bitcoin for a year to, let's say, going into Ethereum or some random XRP or whatever other coins there are, if I had just given up on Bitcoin after a year and I just assumed that I knew everything, then like I said, I would have been an altcoin promoter right now. I would have been talking about altcoins. I would have been saying how altcoins are better than Bitcoin. I wouldn't have dug deeper into why the current system is the way that it is. So what Bitcoin did for me was it gave me a different perspective. And because I have that different perspective now, because of Bitcoin, I have the perspective from the legacy financial system and I have the perspective from Bitcoin. Because I have that perspective from Bitcoin, I know that Bitcoin is literally designed to fix the problems that we have today. We have this housing crisis. We have this cost of living crisis. Owning Bitcoin solves for that. It has the incentives to give everybody a reason to own Bitcoin, because if you own Bitcoin, then everything around you gets cheaper. If your life gets cheaper, it means that you can continue to support your lifestyle. You can continue to support whatever standard of living you have. If your life gets cheaper, it gets easier to support your standard of living. While on the other hand, with the fiat system, you have to continue to work hard. You have to work harder just to do the exact same things, to get the exact same result. Your grandparents were able to buy their house for a box of blueberries. You're going to have to pay your entire life. You're going to have to pay for 45 years to get to that house. That's the difference here. Over time, the legacy financial system has been designed to, over time, take wealth from the people at the bottom and move it to people at the top. And Bitcoin resolves all of that.
Yeah. And you said this was a 4-year journey where you kind of realized that traditional finance as you knew it wasn't working. What was the moment that kind of made you say, you know what, I think Bitcoin might actually be the answer to a lot of these problems? What was that moment like for you?
So I think one of the problems here is that if you talk to somebody who claims to be a capitalist, they're always going to say that no matter what happens, if there's a market for it, then it's perfectly fine. But then you have other people who are socialists who want everybody to have what they want or what they need to survive. And I don't think that's an unreasonable way to think. If everybody should have food. We have enough food, right? We have enough shelter, but there are people who are hoarding as many houses as they can. So not enough people can have shelter. So I think Bitcoin is like that intersection of basically everything, because Bitcoin is neutral. So socialists want everybody to have the things that they need to have in their life, and Bitcoin is going to make that happen. Capitalists want it so that people can create value and they can get paid for that value. And again, Bitcoin is going to make that happen. So I think the light bulb moment, that flick was actually a socialist video. So this guy was saying how landlords are basically leeching from society. And before that video, I just thought, oh, this guy's an idiot. What the hell is he talking about? He has no idea what he's talking about. And I gave it a chance. Luckily, I gave it a chance. And this was right before I got orange pilled. I would actually say that that video was the reason why I got orange pilled, because it made sense. Why is it that a small group of people can borrow money created out of thin air, and then they can buy a real world asset with that money, and then they can rent it to somebody else who actually has to work for that money? Why is it that not everybody is working for their money? Why is it that landlords get to be rich on the backs of other people? And again, the root cause of this is that borrowed money. If they couldn't borrow that money in the first place, then they wouldn't be able to buy that house, and those houses would be owned by the people who actually live in them. So again, that socialist video, of all things, really orange pilled me. And before that, of course, I had put in the time. This was, I think, sometime in 2023, mid 2023, I watched that video. Before that, I had put in the time, keep in mind, to actually study Bitcoin. So even if you're a socialist, if you're watching this video and you're a socialist, you still have to understand what Bitcoin is, right? To put in you have to put in the time to really see where it's going. I get it. The way that socialists think in certain ways isn't the right way, but also capitalists don't think the right way in certain things. So in the current system, people say, oh, housing is capitalism. People owning housing is capitalism. The landlords owning houses is capitalism. But in reality, they're not really creating value to get the money that they have, at least in my opinion. People might argue with me on that. Whenever I post about that, they get really angry, and that's perfectly fine. But the way that I see it, Bitcoin gives everybody the ability to create value and buy the things that they need to survive